Hi, everyone. Welcome to another episode of Relax, I Got This, where we increase your real estate IQ. Today, we have a returning guest, Christian Johnson with Guaranteed Rate, and we're going to talk about not interest rates and all those things, but we're going to talk about what you can do with the greatest asset that you probably own, and that is your home. So stay tuned for Christian Johnson and Relax, I Got This.
A real estate transaction is potentially the largest investment we make in our lives. Whether you're buying and selling your personal home or investing in real estate, you need the knowledge to make the right decisions. Get ready. Robin is a Texas realtor and has the experience to give you the information you need to make the right decisions. Welcome to Relax, I Got This with your host, Robin McCoy.
Hey everybody, it's Robin McCoy and welcome back to another episode of Relax, I Got This. We are in season 3 of this podcast and I'm really excited, and thank you all for tuning in, and to all my past guests for being on the show. And we've got a very popular returning guest here with us today. This is Christian Johnson of Guaranteed Rate. He's been in the mortgage business as long as I've been in the real estate business. You're longer than me. I haven't been there 25 years yet. You're older than me. You've been doing this since God was a boy, apparently. So he was just a twinkle in his mama's eye when I got started. So welcome back, Christian. I appreciate you sitting down with us and just sharing some stories, I guess.
Yeah, you bet. Thank you for having me. This is always so much fun. I can't believe it's 3 seasons.
I know.
Well, it's like with kids, you can't believe they're so big and like we've grown this thing and it's morphed and all the things. So that's awesome. And congratulations to you and your success on it. It's really great stuff you're putting out. So
I love doing it. I love doing it.
Here, for sure.
Well, Christian and I, we call it our taco talks or something. And when we get together, kind of just and go have lunch. We always go have tacos. And we have these great conversations and different stories come up. And I thought, since he's been here a few times, talking about what is the interest rate and what does that look like, it changes next week. So by the time we get this produced and out, sometimes the information is already different. So I thought we would just talk about some of the things that go on in the financing industry, right? Go on and how your house, which is pretty much usually your biggest asset, how can it be more than just the place that, shelter over your head?
Yeah, it's interesting. I think this came out because we were talking about, what you've been going through with your mother and helping her in this season with her journey. And, a lot of people who are of that age or over 62, they're in this house. They've worked their whole life for this house, really. Okay.
Yeah.
They've paid down this mortgage. We all sat at the dinner table with our parents and they said, you can't have any debt. Debt is bad. You shouldn't do debt. Right.
Yeah.
And so we're terrified, like a good Catholic son, I can't do this. The guilt's killing me. I got to pay everything off. And so we do this with houses, right? We got this debt. It's an albatross, the biggest debt we've ever had in our life. And we chip away and knock this thing down over the years. And whether it's paid off or it's almost paid off, we make some huge strides, some big contribution in knocking this thing out. And then we get to the season of our life where we're not working anymore. And so we still pay the debt, or now we've paid the debt off, and we're living on a fixed income. We had a financial planner. That person put us in a plan that not only do we pay off the mortgage or pay down the mortgage, but then we save so that we can retire. So we spend our whole life working for retirement and to pay off debt. And that's the grind of what we do. Then we get in the next season of life where we're supposed to go enjoy retirement. And we go on this and we start to enjoy retirement. And guess what? Now suddenly, like our generation's living longer than the last generation, living longer than the last generation. So there was no way for our financial planner to recognize that, financial planners used to plan out to like 67.
Yeah.
Then they moved up to 76. Now they're up to 85, 90. And, the generation that is finally at that retirement age, they didn't plan for 90, but they're living for 90. And
Yes.
suddenly they're finding themselves pinched.
Yeah.
And you know
Yeah.
what? They have this money that they're supposed to last them to like 76. That's the plan. And if they die before 76, then there's something left over for the kiddos. But if they live after 76, we're in a pickle. And suddenly
Yeah.
now we're living
Yeah.
to like 85, 90. So what do we do? And I think everybody forgets that there's money a lot tied up in that house.
Yeah.
They
Yeah.
don't look, when they go to their bank statements and figure out they're running out of money, they don't actually look at the bank of house. That's not one
Right.
of the statements
Right.
they open.
Right.
And I think that's a huge opportunity. And then they're going to look at it and go, well, I can't take a loan on this house. I don't have any income. I can't pay, can't pay the loan off. I don't qualify. Well, that's why
Right.
we have reverse mortgages. And we totally forgot about this whole reverse mortgage.
But aren't reverse mortgages terrible?
I
My
know,
mom,
right?
my mom got one and they screwed her over. My grandmother had one of those and they stole her house.
And there were some bad people in the beginning who took advantage of some of our loved ones. So I can't say that it wasn't like that. But these are now federally insured. They're backed by HUD, and they're the predatory capacities of these things is gone, right? So you've got this bank of house, and you don't actually have to go get the money out of it. But if you open that up, it's like a line of credit. You can actually get the bank of house to pay you an allowance. So now we've got something to subsidize the fact that you don't have any money in the bank anymore. Now bank of house can take the place and start making you payments for several years. There's hundreds of thousands of dollars tied up in these houses. The other part is I've got this lovely couple. They spent their whole life saving. They spent their whole life paying off their mortgages. They bought their dream house up in Angel Fire, New Mexico.
Ooh.
And they're living their life. But they had a medical event and had to get helicoptered out of Angel Fire to Albuquerque because there's a heart issue. And so thank God everything worked out and they're fine. That helicopter ride cost them $60,000 and their insurance didn't cover it. That's an event.
That's another conversation.
That's a whole other conversation.
Insurance and Medicare.
Oh my God, totally. And I'm not going to go there because I would be way over my skis on that one. Yeah. But they now have a $60,000 bill that has suddenly cratered their plan, and now they're pinched. So we're doing a reverse mortgage for them. We're putting them on first of all, we're giving them $60,000 to like clear out the pitch.
Yeah.
They're never going to have to make a payment on that home as long as they live there. And we're sending them $4,000 a month to shore up the delta because they've outlived their plan. So think about this for a second. I gave them $60,000, so they're now out of the debt with the helicopter. I'm giving them $4,000 a month, and they don't have to make a payment as long as they live in there. That's pretty amazing.
Sounds too good to be true, right?
So,
that's why people don't trust them.
And the number one objection we're getting is, well, then that means when I die, my kids will have a loan on here. Okay, so what?
So what?
They're still going to sell it, and there's still a profit to take, but you now get to live. And you've spent your whole life paying off that mortgage, paying for that house. It's time for the house to pay you back.
Right? I mean, let the house pay for, that's what it's there for. I like how you called it the bank of house.
Right.
Because you've put all this money into this asset and you think it all just has to sit there.
No.
And it doesn't.
And now they don't have to be homeless. They don't have to sell. They don't have to move into some efficiency.
And they can live in the house they want to be in because maybe it's the right house. It's still the right house. Just because you turn 70 doesn't mean your house doesn't work for you anymore.
Exactly.
You get
now
to
they're
stay
living
where
in
you're
their
happy.
dream house that they built for retirement, and they don't have to leave, and they still don't have to make any payments. It's just they're tapping into the equity, and they're getting the equity early because they're not going to use that equity after they die anyway.
Right. That's
so
right.
It's time to start pulling it and live your life.
And I think a lot of people, whether it's in this situation, right, where you're in that season of your life, or you've been in your house and you're middle-aged, right? Now you need money for college for your kids, and you haven't pulled any money out of that house. You've got $500,000 in equity because you've been living in it since they were in kindergarten, and the values have gone, whatever that number is. I'm making up numbers. But not realizing that you can pull money out of that house to remodel it so it works for you, to send your kids to college, to do what, it's your money. It's your money.
And that's the hard part for them to realize, is because they look at it as something that's paid off, and basically it needs to just sit in a drawer and you don't touch it again. And that's not the case. It is an asset. It has value, and you don't have to pay it back. You're retired now. So don't think of it like, I have to qualify for this. You don't have to qualify for this. We're giving you money every month.
Because essentially it's a loan that gets paid off later, whatever is owed, whether you move out and sell it, or you pass away and your kids sell it.
And let's say eventually they do need to go into maybe some assisted care or another type of living arrangement that they're kind of being forced into at that point. Let's say that their health wanes and they need to go to a different kind of facility. Well, they can always sell that house, and the difference between whatever is owed and what the sales price is
theirs.
That's theirs. They get to go take it. So now they can use those funds to pay for the facility. As we know, those are expenses, as you recently found out.
Yeah.
Those are not cheap, but now that money is at their disposal, and now they get to do it on their terms. They don't have to move out of that house unless it's on their terms later on.
And that's one of the, as this country ages, the baby boomers and the Gen Xers are right up behind them. And we are running into a situation where people, I think they're scared, right? I mean, I've got this house. I don't want to screw it up.
Right.
So, it's fine. I know what it is. And then, like you said, you start having to, go down a path that, you thought you had enough money, or you didn't think you were going to live that long, as in my mother's words.
Comes up. You got to take a life event ride somewhere, right?
Yeah. And now all of a sudden, but it's my house. I can't touch the house.
Right. We've got to let go of that.
It scares them.
You've been putting money into that bank of house all these years, 30 years.
30 plus years, right?
Right. It's time to get that money back out and put it to work.
Are you looking to buy or sell a home in the bustling DFW area? Look no further, because I am Robin McCoy, your trusted real estate agent with Keller Williams Realty. For over 15 years, I've been helping buyers and sellers navigate the real estate market here in DFW. So whether you're looking for your dream home or aiming to sell your property for the best price, relax. I got this. As a seasoned professional, I'll guide you through the entire process, ensuring a smooth and stress-free experience. I understand that buying or selling a home can be a significant decision. That's why I pride myself on providing exceptional customer service. I'll be with you every step of the way, answering your questions and addressing your concerns. So why take a chance with just any real estate agent? Choose me, Robin McCoy, the professional who has proven my excellence in helping both buyers and sellers in the DFW area for over 15 years. Call me today at 214-226-3770 or visit my website at robinmccoyrealty.com. Let's make your DFW real estate dreams come true. Relax. I got this.
It's time to get that money back out and put it to work. And
don't worry about leaving money to your kids. Take care of yourself. If there's $1 left over, great. But don't sacrifice yourself because you want to save that house for your kids when you can use it for yourself.
And I think that's where a lot of gets lost. The two things, bank a house and, well, what do I leave to my kids? No debt? How about that? Because if you get hooked around, if you get wound around the hub over tapping into the equity in that house, then that burden goes onto your kids to cover your costs every month.
Yes, it does.
Right?
And again, the elder care is not cheap. It is one of the most expensive things I've seen in a very long time, and I'm astounded by it. And $60,000 helicopter rides to get you to a hospital. So So what are some things that people can kind of start thinking about now? Let's just say somebody's in their 50s and they've got their house and it's not paid off, but they've got it, like you said, knocked down pretty good. What should they start thinking about as far as their house goes and how
They can
that can
start
be
thinking
a
about their
financial?
equity position, right? The
Yeah.
equity is an asset. So when you're thinking about how much do I have to live the rest of my life, you need to think about how much you can tap into that. And that's a discussion you need to have with a financial planner or with your mortgage professional. And, at this season in life, it is a mortgage financial planning
Yeah.
conversation to have, right? Is that, say, I'm in my 50s. I don't know what this looks like in my 60s and 70s. What happens if I outlive my plan? Maybe I got a late start on that 401k, or I got a late start on saving. It's easy to tell a 20-year-old you need to put $100 a month away, and then they don't do it until they're 40, and they realize, like, I'm way behind. That turns into $1,000 a month,
Yeah.
right?
Yeah.
And so, or $10,000 a month, whatever. It turns into this astronomical number. But we can preach all we want to 20-year-olds who aren't going to listen to us. And so suddenly we get into we get to 50, and we're like, man, I got a late jump on this whole retirement thing. I'm not ready, but I have, $500,000 tied up in my house. Okay, well, then
Yeah.
we got to figure out how to deploy those funds, tap into some of that, get that money invested now. You're at 50, you're not going to retire till you're 65 or 70. That's okay. But we need to get that equity working for you now. Even if you're getting 10% appreciation on your house, okay, so it is growing. That house isn't going to stop growing, but it
No.
may be a good idea to pull money out of it now and diversify, leverage that money, and put it with a financial planner who can make 6 to 8%. So now
Mhm.
you take 10% appreciation you're getting on the house, plus the 6% you get with your financial planner. So now you're at 16% appreciation
Yeah.
on that money that was already locked up.
And it was just sitting there, not
Absolutely.
doing anything for you.
But you got to have these conversations, and you got to jump into it early. And it's something we're very uncomfortable with until we have a $60,000 helicopter ride.
Yeah. And then you start looking under you know, every cushion for every dollar because now you've got a $60,000 bill that you weren't
Right.
anticipating.
And then you're having the conversation and having to own up that you were late to the party in saving.
Yeah.
And now
And
you're
then
behind and you're
and
in a
it's
pickle.
embarrassing.
Sure.
And you don't want to be 70 years old and have to tell people that you don't have enough money.
Right.
It's embarrassing. We don't
So
like
it
to
can be a
talk about
very
those
intimate.
things.
I mean, it's very intimate conversation to have, but you have to have it.
You have to have it. And that's one of the things that we're talking about to a lot of people on the real estate side is how much equity do you have in your house? What is your value of your house right now? And where are you in your stage of life? Doesn't mean let's go sell your house. None of that means sell your house.
Right.
But it's having an intelligent and real conversation with yourself, with your partner, with your family about what that house is going to do for you as you move through your seasons, whether you're 30, 40, 50, 70, or whatever that looks like.
And even if you got late to the game at 40 and started saving for retirement, you still need to have the conversation about how you leverage all your holdings, not just your retirement holdings, but
Yeah.
your house holdings, so that you can put yourself in a better position later. And that's where I find the biggest joy in this job, I'll be honest with you, is helping people financially plan for the future so that they're constantly building growth.
Yeah.
And moving forward.
Well, and that's the other thing too. So, just kind of coming out of the retirement side of this story. So I'm a first-time home buyer. I bought my house 5 years ago. And now I'm outgrowing it, but the values went up great, right, over the last 5 years, across the country. So how can I use the equity in my house to go buy another house without selling this house? Can I do that?
You can. So, there's a myriad of ways to get there. Texas does have some limitations, so we can lend up to 80% of the appraised value in today's market. So,
Okay.
For example, if you owe 300, the house is worth 500, then I can give you a loan for 400, and that will pay off the 300 and put 100,000 in your pocket. Okay.
And do I get to keep? And do I still get to keep my house?
You get to keep your house, and you
Okay.
can take that extra 100,000 now and create down payment for the next house.
Perfect. Okay.
And so if you look at it this way, you have one house worth 500. I just gave you $100,000 to put down on your next house. So you go buy another house for, let's say, 500, because I'm
Okay.
using round numbers here.
Right.
And you put $100,000 down. So now you have a loan of 400 on two houses. One of them is a rental, so it's paying itself off.
Mm-hmm.
And now you own $1 million worth of real estate.
And 2 little transactions.
That's it. Yeah.
And that's what people don't, and I'll be honest, as I was growing up and I've had a couple of houses and that never even occurred to me that would be a possibility. And this is how you build wealth.
Here's the part that really gets you excited. Is you had a house at 500,000 value and it was appreciating at 10% a year. So next year it'd be worth 550. Now you have $1 million worth of real estate, and next year it's going to be worth 1.1. So now you are growing your appreciation rate. You've doubled it.
Yeah.
Right?
Yeah.
From 50 to 100,000 a year. You just got a pay raise.
That's incredible. It's
That
incredible.
Is an amazing pay raise.
And that's what a lot of, I think, the people that bought a house or own a house already, we get in, again, it's this story we've been told for years and years and years that you got to sell the house to buy the house. But
Right.
do you? Let's ask the question. Sometimes you do. Sometimes you don't have the funds, and sometimes you do. And I'm going to say this as a blanket statement. These are all generalities. Every single person in the world is going to have a different situation. So don't come back to me and Christian and go, well, you said on that podcast. Well, you still have to do the things. But you don't always have to sell that house because of the value and what you owe on it. And I think it's important that people understand it.
You should explore all the options at that
Yes.
time, right? In hindsight, I wish we wouldn't have sold our last house that we sold.
Be the leader you know you can be. Build your professional network and access education that takes you where you want to go. We are women of all ages and backgrounds. You deserve national recognition and opportunities to build relationships with people you want to work and grow with. Hit the ground running with the Charisma chapter of the American Businesswomen's Association. Meetings each month from 6 to 8:30 p.m. on the 4th Tuesday in Farmers Branch, Texas, and online. Come with us. Experience ABWA for yourself. Go to charisma.abwa.org to learn more.
In hindsight, I wish we wouldn't have sold our last house that we sold.
Yeah.
But if I take myself back to that period in our life, my wife was 8 months pregnant. We were a little strapped for cash for the down payment on the next house. It was just a different season of life. And so I get it. It's not always appropriate. But boy, if you can swing it,
that's a big deal.
It's a heck of a ride.
And so it's finding somebody, it's finding the professionals that are looking to see what is best for you and in your situation.
Right.
I had somebody ask me actually it was on Facebook today. Now I know there's an assumable mortgage. Is there a transferable mortgage? Meaning I own my house. I've got 3% interest. I've got $300,000 in equity. Can I take my mortgage on my house A and move it over to house B and keep my 3% rate that I got 2 years ago?
Yeah. A dear friend of mine asked me that many years ago, and I smiled because it was a great conversation. And she's right. We should have been able to invent that by now.
Yeah.
But that's kind of how the banks make it.
I guess that is how they make their money, right? It's
we kind of lost some big banks this year because they had a lot of 2% mortgages on their books, and suddenly rates are now 7%, and they couldn't cover the hedge basically.
Yeah.
So
in other words, Candy York, no, you can't do it.
Sorry, Candy.
Sorry, Candy, we can't do it.
And I love the conversations about assumables because I see it. We're seeing it more and more.
Yeah.
And we got to remember, one, there's only 2 types of loans that are assumable. BA, you got to be a veteran, so you have to have served. Not a lot of us did have that, but if you are, God bless you, and yes, you should be able to get that. And then 2, FHA.
Right.
And both of those are owner-occupied loans. So there's all these investor kind of vultures out there. I want to take that assumable FHA loan at 3%. I'm buying it as an investment property. No, you have to
No,
live
you're
in
not.
it. Stop.
No, you're not. Stop doing that. That's not how it
FHA is
works.
not in the business to help investors. Sorry.
No, absolutely they're not. They make it harder on you.
Right.
But so let's talk about the assumable for just a little bit. I mean,
Okay.
you don't get to just go in, I'm going to take that loan. You have to still qualify for it, not the loan value that's left, but the value of the house.
And you have to
Correct?
qualify for the loan.
Yeah.
Right?
Well, yeah. Yeah.
All right. You got to be able to pay it back. They're going to still run you through the stress tests of income and credit and assets. And here's another reason why we're going to see very few. We'll see some assumables. But the other reason is these people that have these 3% mortgages probably bought 2 years ago.
Right.
2 years ago, the appreciation rate was 20% in Dallas, Texas. Last year, it was 10%, which is remarkable in a really terrible year. So that's 30% appreciation. So the house that they're selling today with their assumable loan, they probably bought for 300, and let's say they're selling it today for 450, 500. We'll call it 450. All right, we'll call it 400. All right. So they have a mortgage on it for a hair less than 300 because they put little down and got an FHA loan.
Right.
So we'll call it 295 for round numbers. They're selling it for 400 because they deserve to get their appreciation. That's the game, right? We want to make money on this real estate thing.
Right.
So there's 100,000 in there. So whoever buys that house and assumes that mortgage at 3% has to come up with the cash delta of $100,000.
So it's just like if you're paying over an appraised value.
Yep, that's right.
You're making up the difference between what the loan value is and what you're going to pay the seller.
Right. You don't get a loan on top of that loan. You don't get a second lien on top of that loan.
Okay.
You've got to cover the
I guess
delta.
that's the question. You don't get this. It's not two loans. You don't assume theirs and get yours another one for 100,000 at 6%. You've got to you get your 3%, but you got to have the absolutely.
And that FHA loan you're getting, the rate may be 3%, but it has PMI on it.
I was going to say forever.
And it will always have PMI.
Forever.
You can never get rid of that PMI. And that PMI makes the effective rate really like 4.25 or something like that.
Yeah. So it's hardly worth it.
Right.
Just get in at the 6%.
Less and less savory. Suddenly now I get paying 100,000. Suddenly now I've got, this PMI thing that I can never get rid of. It all sounds great, but it, and it gets.
But when you get down into the weeds with it, it's not as, and they'll work for some people. It'll be great for some people. Just depends on the situation.
Just know what you're getting into.
Yeah, it's just not a gimme. It's not a gimme.
It works out. Congratulations, that's awesome. Yeah. But just be careful.
Well, because I think sometimes we think things are a gimme and they're so easy.
Oh, well,
and
TikTok tells me it's easy. What are you talking about?
Well, yes, but if it's TikTok is gospel.
I'm telling you, if it's not on the gram, it's not real.
Exactly. Well, and that's and I somebody else said something on Facebook that I saw some, and she said, I'm not an expert. I don't know anything about this. I'm not a bank. However, I saw something on Instagram about, where you can take over somebody's loan. I'm like, well, that's an assumable loan. And there's a whole lot of things that go along with it. You don't just get to say, here, let me just start paying your loan.
Right.
Doesn't work like that. So what are some other things, just as we kind of wrap up a little bit, what are some of the other things that maybe people aren't thinking about when it comes to the bank of house, what that can mean for them?
So, for anyone who's young or getting into real estate or getting into, even someone who's recently had a breakup or maybe a divorce and they're starting over and starting to build that nest egg all over again, I think it is amazing that you can buy a 2, 3, 4-plex to live in with 5% down. And when you're starting over again, sometimes 5% down is really appropriate. And you can rent out the other units. And your only obligation is you need to live in that home for a year.
And you can homestead it.
So then you live in it you rent out the other 2-3 units that offset your mortgage payment. You're getting appreciation at 10% on much more house than you were going to get if you just bought a single family unit. And then next year, you move out and go buy another house. So now you have 4 rental properties.
Brilliant.
Yeah.
Brilliant.
I think that's fantastic. I think it's just a great way to, if you're launching into this, then you might as well just take a big chunk all at once, go get it. And then now managing 4 units that are all together right there is so much easier than having 4 different houses spread out throughout the city.
Yeah.
That you had to figure out cash flows on. You got it all. It's all centralized. It's just.
I think that's brilliant.
And I think a lot of people really miss out on this gift that Fannie Mae and Freddie Mac just opened up to us in the last 6 months by allowing us to buy multiple units with 5% down, get a homestead exemption, pay PMI, and get someone else to pay the mortgage payment.
Yeah.
It's really a neat tool.
And that's just not here in Texas, y'all. That's a nationwide thing. So, think about it. There's any number of different avenues. You just have to, I guess, know the questions to ask, right?
No. Yeah.
And ask the right person.
You got to link in and hook up and start asking questions and let people know what your goals are. And I know that's very uncomfortable, but like, where do you want to be in 5 years, 10 years?
Yeah.
What does retirement look like for you? How do we get you there? How can we get there aggressively? And that's the conversations you need to be having. And
that doesn't mean that, if you're not ready to buy a house or sell a house or get a mortgage or refinance a mortgage or any of that Christian and I won't sit down and talk to you.
Right.
We want to be a part of your long-term plan so that we can help educate and guide.
And
We're
sometimes
guides.
the answer is not right now, but let's get you on the plan so we can do this later.
Yeah, exactly. And let's educate ourselves on what is possible.
Right.
One of the biggest struggles I had with this stuff with my mom is I couldn't get paths defined, right? I need to see, okay, I get 3 choices so that when the time comes, what one do I want to take? And that's exactly what this kind of conversation will give you is here's 3 or 4 avenues. And when you get to this spot, you can look up and go, not yet. Then you get to this spot and you go, you know what? I think path number 2 works.
Right.
So you go down path number 2 and then you get to the next spot and you see what those next 2 to 3 paths are. And it just gets you to a better place better. That makes sense. So
you got to get on the plan.
You do. And you have to know what's going on. So, well, thank you so much for spending some time here. I think we kind of maybe tickled some creases in some brains a little bit about what might be, you got those wrinkles on your brain and sometimes they go a little dormant and we need to tickle them a little bit to get things fired up.
It never hurts to have a conversation and certainly ask. Yeah. And if this is, at any point tickled a crevasse in the brain, then let's talk, let's see what we can do to help.
Awesome. All right. Well, thanks you again, Christian. I always love having you on the show. So thanks so much for your knowledge.
Me. Congratulations on all your success.
Thank you.
Cheers.
All right, everyone. Thanks again for tuning in to this episode of Relax, I Got This. And make sure you hit that subscribe button. Keep following along because we got more stuff coming up in season 3.
Thanks for joining us for Relax, I Got This with Texas Realtor Robin McCoy. Check out all the show notes for contact information on Robin and our guests and to access your free buyer and seller guides. Also, don't forget to hit that subscribe button so you never miss a conversation. Thanks again, and we'll see you next time on Relax, I Got This with Robin McCoy.